Hey everyone, Dave Keller here with Market Misbehavior. With NVIDIA's earnings this week, investors are reminded once again of the importance of the semiconductor space. Really represents the heart of the AI theme, this AI trade that has been such a winning trade over the last 6 to 12 months. What signs are we seeing of a potential top in semiconductors, and what could that mean for the rest of the equity markets? Before we get to those charts, here's one more thing I want to tell you about. I spent many years earlier in my career working for large financial institutions. And when I left the institutional world, I remember thinking, what am I going to do to replace these big, expensive, but powerful institutional investing platforms that I've had access to this whole time? There is an option now for individual investors and financial advisors, and it's called Koifin. Koifin really combines some of those great capabilities of the big, expensive institutional platforms, along with some capabilities really optimized for financial advisors and high net worth individuals, and puts it in a very low cost, underpriced package on a web-based platform compared to the possibilities that you can achieve by using said platform. One of the features I love to use on Koifin are the ETF holdings. You can take an ETF, you can, like the QQQ, you can look at the biggest weightings, you can look at weightings by sector, you can run some basic attribution analysis. So for ETFs that you own or that you're considering owning, doing the due diligence of really understanding the exposures you're going to get is super important and super powerful for your portfolio. If you go to marketmisbehavior.com/Koifin, you can get 10% off any new membership. I hope you will check it out, and I hope you will find it as meaningful and powerful and impactful as I have found myself. Now let's get back to the charts. So here's the chart of the semiconductor ETF, ticker SMH, and I've gotten some questions about this recently, asking whether this is a head and shoulders top. And that's what I'm sort of illustrating here, and what I will tell you is the short answer is it's not a head and shoulders top yet. The way it works with price patterns are you actually have three components to any price pattern, like a head and shoulders top, a triangle pattern, or any of those sorts of things. The three phases are as such. Number one, the setup. And this is where it starts to look like the pattern. You look at the chart, you can kind of tell it looks kind of like a head and shoulders pattern. And that is the phase I would argue we're in right now on the SMH, because we can see a clear head, and it's really kind of a multiple double top kind of head here, but you can see a clear peak in June and July, a lower high, a left shoulder here in March, and now an obvious or most likely a right shoulder in August. What's really interesting about the chart of the SMH, by the way, is every one of these, the head and the two shoulders, are all marked by a classic candle distribution pattern called the bearish engulfing pattern. That's where you have a big up day followed by a big down day, where day two's range engulfs day one's range. You call that a bearish engulfing pattern, or if you use candle charts, you call it or if you use bar charts, call it a bearish outside day. But you see another one at the June peak, another one at the July peak, and another one here at the August peak. This is a pattern that I love using, even as a medium-term, long-term investor or position trader. It really pays to look for short-term candle patterns that can really suggest a change in the short-term sentiment. And that's what we've seen pretty much every one of these major peaks here for the last 6 months. So the first part, the setup phase, I would argue we've got it because it looks kind of like a head and shoulders top. But you also need the second and third phases. The second one is what I call the trigger. And every pattern has a level or a signal, the trigger that actually tells you the pattern is now completed. Right now, it is still a forming pattern. It's a potential head and shoulders top. The way that it becomes a valid head and shoulders top is we have to break what's called the neckline. There's some different ways of thinking. I'll show you each of them. But here on the chart of the SMH, classic methodology, and this is derived from Edwards and McGee, their famous book, Technical Analysis of Stock Trends, mid-20th century book, considered sort of the Bible of technical analysis, and certainly the Bible of price patterns, because it really popularized a lot of these pattern-based tools that many people take for granted nowadays. What they talked about is using the intraday lows or the intraday highs to calculate this neckline, and what you do is you look at the head and the left shoulder, you take the swing low between them, take the head and the right shoulder, and you take the swing low between them. You connect those with the trend line, and that's called the neckline, right? The head, the shoulders, and then this is the neckline. When you break the neckline, that completes what's called the trigger. I think that's the signal that this is definitely a head and shoulders top. The third phase, by the way, which would come after that, is what I call confirmation, sort of an additional follow-through, because a lot of times you'll have what's called a failed head and shoulders top, where you actually break below the neckline and then just as quickly go back higher. That's the whipsaw that many traders, if you've been trading for any amount of time, you've probably been whipsawed at least a couple times by the market, giving a clear signal, then immediately just doing the opposite of what you'd expect. And to minimize the chances of that, a lot of times it pays to wait for what I call a follow-through. So those are the three parts to it. So is it a head and shoulders top at this point? It's not. Is it a potential head and shoulders top? Absolutely. And I think, again, we've done that first piece, which is called the setup phase. I would need to see the trigger, which is a break below 200, and then the follow-through, which would be additional movements to the other side. By the way, another way of thinking, is to use closing prices only. That makes the chart a little cleaner. It makes the analysis a little more simplistic. But I would argue still a valid way to think of it. If you use the closes only, by the way, and I just wanted to show that it does give a different neckline. You have the head, the left shoulder, the right shoulder, similar to the previous chart. But now we have the swing lows connected by a trend line. So the April closing low, the August closing low gives us a neckline around $215 as opposed to $200 a share. By the way, on the closing only version, you can see that coincides almost perfectly with the 200-day moving average. So the way that I would think of this is, as long as the SMH remains above its 200-day moving average, remains above that 215 level, it's really not a head and shoulders top. And while you're seeing some short-term weakness in the form of a lower high, it's not really following through to the downside. This is still okay from a long-term perspective. But if and when we break below these necklines, if and when we break below the 200-day moving average, that would be a very different look for the SMH and a different look for semiconductors. Another thought just on the chart of the SMH, and I'll give you a couple other thoughts about what this means for the broader market impact. So I would also argue just basic Dow theory analysis, just basic price analysis of trends has to be part of the thinking as well. And if you apply that sort of thinking here, we've made a new swing low, right? The August low has undercut some of these lows in July, and now we've made a clear lower high. And I think that's one of the most significant parts of this chart. When you think about what a head and shoulders top actually represents, it goes back to Charles Dow's analysis of trends back in the early 20th century, which talking about an uptrend being a pattern of higher highs and higher lows, and a downtrend being the opposite, lower highs and lower lows. So when you start seeing lower highs, meaning instead of making a new high, we fail to do that, a lot of times that's an early warning sign of a reversal in trend. And that's why Elliott wave theory deals with a major peak and then, making new, lower highs as part of like an ABC correction. This is why head and shoulders tops are a pattern, because it really is based on a lower peak and then a follow through. Because if you break through the neckline, then all of a sudden you've made a lower high and a lower low. And so it's all based on Charles Dow's foundational work in technical analysis, really defining a change in trend. So that is what I think would signal a change in trend for semiconductors. Now, what's the potential impact for the broader markets? Let's look at the year-to-date returns in semiconductors versus a couple other sort of major equity ETFs and see what they mean. Semiconductors, starting at the end of 2023, going through the end of this week, semiconductors using the SMH is up 38.1%. The S&P 500 is up a meager 18.7%. The Nasdaq 100 up just over 16%. Here's the equal-weighted S&P 500 up just under 12%. Now, why am I using these three? Well, the S&P 500, important to use as comparison. I would say for the most part, that should be your main way of comparing any other stock or ETF to the broad market, because so many investors, so many assets are tied to the S&P 500 as a benchmark. A lot of big mutual funds are tied to the S&P 500 or a similar benchmark. So I think it's an important one to watch, because that really defines for a lot of investors and most in the investing community sort of the performance of equities in the U.S. as a whole. The Nasdaq 100, of course, represents those mega cap growth names. So while semiconductors certainly are a part of that, with names like NVDA as part of that ETF, it also plays on other technology, communications, and consumer names that are all part of those top 100 Nasdaq listings. The equal-weighted S&P is super important to look at right about now, because the equal-weighted S&P has actually been outperforming the cap-weighted S&P here in recent months. And that speaks to the rotation away from groups like semiconductors and into other areas of the market like industrials, materials, even defensive sectors like real estate, utilities, and consumer staples. So year to date, semiconductors have far outpaced the S&P and the equal weighted S&P 500. But remember that the market peaked here in July. The S&P 500 actually peaked on July 16th. So what if we look at the performance of these ETFs from that market peak? So the market sold off in July, has rebounded very nicely in August. What's happened? Well, here's the S&P 500, which is almost back to that July peak, just slightly below, around 0.7% below that July peak. The equal-weighted S&P is actually above its July peak. It's up 2% over that same period. The Nasdaq 100 has underperformed since the July market peak. It's down about 4.4%. And look at how far semiconductors have underperformed the S&P since the July market peak. We've had this V recovery, but semiconductors have recovered a lot less than other areas of the market. Just look at the last couple of weeks at how semiconductors are trending lower and the equal weighted S&P 500 is trending higher. What this chart tells you is that the juice, the good stuff, the outperformance is not coming from semiconductors. So what does this all mean for investors? If this is a major top on the SMH and if it is a head and shoulders top, I would say semiconductors are in a very vulnerable position. That will most likely weigh on the Nasdaq 100 because of stocks like NVDA and others that are huge weights in those ETFs. The S&P, of course, as well. But the equal-weighted S&P still remains quite strong. And I'm seeing plenty of breakouts in other areas of the market. Now might be a very important time if you've been really tied in to the AI frenzy semiconductor trade. Good time to think about diversifying into other areas of the market that are still showing strength here going into September. For Market Misbehavior, I'm Dave Keller. Have a great one. We'll talk to you again soon.